Hey, good morning, ladies and gentlemen, traders. Rick here at Hit and Run Candlesticks. How's everybody doing today? TGIF, it's Friday, September 11th, 2020. September 11th, 2020. I do want to wish everybody the best of days and the best of weekends coming up here. I've got a few charts I want to look at. We're going to do it a little different today. I've got no real trade ideas to speak of because I think the market is pretty junky. But what I am going to do is go over some charts that I'm in, why, and show you some of this chart patterns that I like, and well, maybe just get a new view of trading. But let's start with the SPY here. Friday, the SPY ended up with a bearish engulf. Pretty healthy, really opened up relatively high and has come pretty far down here, actually making a little double bottom. And I see this morning that we're opening up a little bit off the bottom, a little bit, not a lot. I may have said this on this video blog yesterday. I know I said it to the trading room. Anything in this area here, we'll draw this back up. There we go. Anything in this area above 330.265 and below 344, well, let's call that 345. Right in here, this is crazy trading right in here. This is nuts. One of my trading tips that I follow is knowing when to trade. In other words, what market conditions are best for me. I mean, it's my money, so I want to do what's best for me. Anyone else out there, any other traders, it's your money, so you have to learn what's best for you. What is not best for pretty much 100% of all traders is just to trade willy-nilly every single day. And I know what works for me. And I know that a nice trending chart, up or down, doesn't matter, is the best place for me to make money. I've done a lot of coaching over the years. Because of my position with Hit Run Candlesticks, I get the absolute privilege to speak with many traders. And probably one of the top 5 issues that traders have is not trading with a trend. And when they learn to trade with that trend, whether it be bullish or bearish, their trading improves almost immediately. And there is a light bulb that goes off that says, wow, look at this. It can be done. So I'm looking at this trade right here on the SPY, or just the SPY in general, because no matter what chart you are trading, if you don't have the SPY or the S&P 500 on your side, you will be trading against the group. That right there is something that rarely works out for people, time after time after time. So as we're trading in this area right here, I'm thinking, all right, the best trades are going to be when we finally break down. And I do think if we start to break down here, there may be a trend that's working to the downside. I'm going to go to a different, let's go to this chart right here. All right. This is the 50-day simple moving average, this blue one, and here's the 34. This, of course, is the T-line, and this is our deuces down there. So you can see we're nearly at that 50-day simple moving average. So if we continue this trend down and we get through that 50-day simple moving average, then I suspect eventually we get closer to the 200 than we are now. Now, we may see some rallies up for sure, but I suspect we see something down here. Now, if the buyers or the bulls can hold us in this area, and if they can start to put some buying together, and if we can break out of this 245, 345 area, break out and then prove we can stay there, then we might have a bullish trade. But if all we do is come up and then just turn around and fail, and we just play around here, this is going to chop up majority of traders. Not all, but it will chop up the majority of traders. And this is a tough trade. I'm not going to lie to you. I told the trading room yesterday that I am pretty much 100% sure that I will go into 100% cash before the day's end. This is Friday. For those that maybe you're listening is weeks from now, this is Friday, and I'm going to choose not to have any risk over the weekend. And that is the reason I want to close everything, is I simply do not want risk over the weekend. It's just not worth it. So if we get some money made in the next little bit here, when the market opens up, we'll be taking those profits off, and then toward the end of the day, we'll be making sure that we're out of everything. So anyway, the market here, I think, is a little wacky, and I think we need a better market to have better trading conditions. Here is, let's get rid of this one. Let's get rid of that one there. There we go. And there's the 50-day simple right there. So FNGU, one of the most important charts in this market right now, because it's one chart that shows the big tech, and the big tech is important, very important. So as long as we stay in this area right here, I'm very cautious and very nervous that neither the buyers nor the sellers have a clue of what they're doing. They're trying. The bulls want to break out, but they don't have the strength. They don't have the muscle to get broken out. The sellers want to drop down, but they alone do not have the muscle or the strength to get out. So what happens is a lot of fighting in here. That fighting in here will cause chop to people like you and me. And I don't want that kind of risk. Now, in the past few years here, we've run an account called Road to Wealth. One of the rules of the Road to Wealth is trade when you're comfortable, not when you're not comfortable. I am not comfortable with the current market. Our goal is to make money with limited risk, not to trade with a lot of risk on and end up losing money. So the Road to Wealth account, which has had from January 2018 till about 2 months ago, about 1,400% increase, $5,000 to $78,000. Now, this past month, we have closed that account up. We're starting a whole new Road to Wealth account, this time starting with $10,000. We're already up $1,000 in less than a month. Why would I want to risk that? I don't have to trade every single day. So, once again, because of the way this chart is looking, because we have no real conviction either way, it's more chop than anything, we will be limiting our risk. Let's take a look at VXX, and then we'll be looking at a few charts that I am in that I do plan to get out of today. So here's VXX. This little light line right there, that's the 50-day simple moving average. We're 1 penny, if it matters to anybody. We're 1 penny from a perfect tweezer bottom down here between yesterday and the previous day. Now, to some traders, that doesn't mean anything. To other traders, candlestick traders, you know that as a very possible reversal area. It's not perfect. It's 1 penny off, but usually we'll let 1 penny go. So we're going to watch this very closely for a possible reversal. Now, this is one of these charts that I own. I bought some yesterday because we were holding up pretty well here. Here's the chart. Here we have our downtrend line. You can see the red dots here. That's the trend indicator. You can see the price is under the trend indicator, and that's what makes the dots red. And then that points out a downtrend. Now, as a trend swing trader, I see no reason to be buying anything under this area. However, let's change that to green. However, see how we've started to turn up here? And now you can see these dots have turned green. Well, that means that we can start looking for trades. So here we've rallied up and pulled back. That is, to me, one of the perfect charts to trade. Up and back. And then what we want to do is look for an entry, something like this. Well, here we've gapped down. We gapped down the day before yesterday. We held up, put in our low. Yesterday, we kind of fumbled around a little bit. 1 penny off that tweezer bottom, I decided to take a little bit of risk here. Now, it will be important for this thing to move up. If it doesn't move up, then I'm going to have to close it out. If this starts moving down below these lows, depending on the power that it moves down, I'll close it either out right then, or if it's just weak and the market still looks like market may drop a little bit, then I'll hang on to it toward the end of the day to make my decision. Now, if this starts to move up, I will take my profits today. I will not hold this over the weekend. I will take my profits. All I need is base hits to meet my goal to double my money, double it, or even triple it. That's my overall plan with the Road to Wealth account. So VXX is one we're in. So far, it's a pretty good looking chart. I sure would like it above 28.15, and above 28.15 we'll be making good money, and I'll be looking for that base hit. Another chart we are in is Coke. Now I bought Coke, this was yesterday. I bought Coke here. I was actually out of town on a trip in Arkansas. Went down to Rogers, Arkansas. And I was sitting in the hotel, had my laptop on, and had the scanner on. I love the scanner, folks. The scanner is a game changer. If you have questions about the scanner, please reach out to me. I'd be glad to help you. So I downloaded the scanner, and boom, here comes Coke. I like the candle in Coke. I like the price action of the last 3 or 4 days. I like the chart pattern of the past week or so. I like the fact that Coke is trending up. Remember, I'm showing you trades I'm in, and I'm trying to show you why. So if somebody is wondering what I'm doing, that's what I'm doing. I hope it's helpful. We've got resistance up here, and you can see Coke has broken out, and now it's pulled back. So this area right in here becomes a buy area for me, right in there. Let's put green box in there. There you go. That all becomes a buy area. Now, can Coke make me any money? Well, I come up here, and here's the top right up here. Sure it can. Now, I don't generally look at that top. I'm not looking for that kind of money. It's not my type of trading. For the most part, I'm a short-term swing trader. Short-term swing trader. I'm happy with smaller gains. I don't need 100% or 500% gains to be a moneymaker. I've proved it over the years. And so I'm real happy with what I do. And I'm looking for a little swing up here to about 50, we'll call it $54. And if I can get a swing up here to $54, I'm likely to take some money off the table. Now, I did mention that I'm likely to be in 100% cash today, and that is true. That means I may sell my Coke no matter what it does, but I can buy it back. I'm selling this weekend because I don't want any risk. Too much stuff is going on out there in the world, and I would prefer my money be a little bit safer. Okay, let's see, did I say everything why I bought this? A trend, we broke out, pull back, okay. Another one, this I bought yesterday, MGM. Now, this didn't quite fare as well as I would have liked. MGM, this is right here, a pretty nice little chart pattern. What I'm looking at is the fact that we've rallied up, and now we've just consolidated right in here. So That's a good chart pattern. I was hoping that yesterday was the day. It was a better candle when I bought it, looking more like this right here. But it did kind of peter out and sink back down here. So we'll watch this. Now wouldn't it be nice today if it just opened up and started moving? Well, that would be wonderful, but we don't trade on hope. So if it does nothing and it just stays here, it's likely to get closed today, but I'm likely to keep it on the watch list to buy it back. Once again, I want to limit my risk. SDS. Whoops, let's get rid of this. Let's take a look at SDS. So SDS, and by the way, a lot of the inverse ETFs are looking really, really good. I chose to buy some SDS yesterday, currently up 7.5% on it. SDS, first thing I want to look at is this low to high to a higher low, and we're on our way to a higher high. That right there to me is a great chart pattern. You know, anytime we rally up and then rest, then I'm going to look for those buyers like this, and that's just what we did. Here's the buyers in there like that, and bang, making good money so far. Now, we have broken out of this downtrend here. You can clearly see that we've broken out of the downtrend. What would be nice now is if it continued up. This is the 50-day simple moving average right there. You can probably barely see it. So if price was to sneak its way up there, that would put a pretty penny in our pocket, and I can pretty much guarantee you we'll take that money off the table. Once again, I do not plan to hold SDS over the weekend because I don't want the risk. Not worth it. Alrighty, I hope that was helpful. One thing I will be doing today, if you follow us on StockTwits, Twitter, or at our Hit and Run Candlesticks Facebook page, if you do that, I will be posting some trades today that I see that I like. Again, this is Friday, September 11th, 2020. So I may not do that Monday, but today, if you are, if we are all friends and hooked up on those pages, one of those pages, I will send that information out on trades that I like with some explanation and charts. So please, if you get a chance to do that. Also, don't forget, if you would like to never miss one of these video blogs, please consider registering for our channel here, and then you'll be notified when there is a new video out. Alrighty, again, this was Rick with Hit and Run Candlesticks. Thank you very, very much for listening to our Friday edition of our morning blog. Everyone take care, have a great day, and we'll see you in the trading room.